If your solo law practice is stuck under $100,000 a year, or you have a small firm and it's plateaued at $250,000, $500,000, or $1 million a year, you probably think you have a big marketing problem. The truth is, it's almost never a marketing problem. More leads into a broken system is both a waste of your ad spend and it results in more hours of your time with almost no upside. As for hiring more staff on top of missing or broken systems, simply multiplies your chaos. And the work you do yourself doesn't scale. You've got 40, 80 hours a week, that's it. The firms that break through fix the same 5 items before they grow. I'm gonna show you what those 5 items are, and the one that most attorneys can fix this quarter that recovers 6 figures a year, 5 figures a year, depending on the size of your firm. I'm Jason Elliott. I'm the founding attorney at Bay Legal. In 2023, as a part-time solo, Bay Legal made almost $110,000. I decided and I hired my first employee the first week of 2024. We did over $600,000 that year. In 2025, we exceeded $2.6 million. That growth wasn't an accident, and it took a huge personal commitment, both financially and in my time investment. Before law school, I ran data center operations as the 32nd employee at eBay. I was a CTO and then the CFO at multiple Silicon Valley startups. I came to law from finance and operations, not the other way around. As Bay Legal scaled, 3 internal functions emerged that the firm couldn't run or grow without. That's staffing, training, and systems. Once those 3 stabilized, I split them into a separate company. That company is Xprts. Everything I'm about to explain to you is running inside of Bay Legal right now. It's running inside of firms that Xprts works with. This isn't theory, it's the actual infrastructure that produced the growth I just described. Okay, here's the pattern, and I've experienced this myself, and I've watched it 100 times. An attorney knows the firm is stuck. The plateau is real, the stress is real, and you sit down and you try to address what you think the problem is. And almost every single time, the fix is the wrong thing. It's not because we're not smart, it's because the symptoms and the cause look nothing alike. Almost everyone thinks they need more leads. Whether that's true or not, they also need to be looking at their conversions. They think they need to hire another intake person, another paralegal, another attorney. They actually have a systems problem that no new hire can fix, and any new hire can actually complicate. They think they have a cash flow problem, but it turns out in most cases they have a collections problem. And those misdiagnoses lead firms to spending money, sometimes a lot of money, on the wrong fix. 6 months later, a year later, you're in the same place looking for the next thing to try. I've developed 5 pillars that create clarity and can help all of us stop doing that. The 5 pillars in order, but depending on where your plateau is coming from, the order might not be the same in every situation. Pillar number 1, intake and sales. When a lead arrives in your firm, you have to ask yourself 2 questions. What happens to that lead in the first 5 minutes? And what are your conversion rates? If you don't know the answer to these 2 things, we probably have an intake and or marketing problem, more likely intake. Pillar 2, systems and automation, specifically your practice management platform. In the tech industry, we have a name for software products that we purchase and we don't implement. It's called shelfware. We bought it. In the old days, it sat on a shelf. Now it's digital. And we never implemented it, or we never implemented it fully. It's shelfware. Most firms use less than 25% of what these systems are capable of. These systems don't come with the best support. The tech companies love to sell you the product, but they don't have the staff to help you implement it, and that staff hasn't worked at a law firm before. So if your systems are not fully automated, if you're not a tech person, then you probably have a pillar 2 problem. Pillar number 3 is billing, and almost more importantly, collections. This is the gap in the money you've already earned and hopefully already invoiced for, and the money you've actually collected. We're going to come back to this in more detail. Pillar 4 is sometimes what people look at as pillar 1. It's staffing and operations. The mistake almost every firm makes, including myself repeatedly, is hiring before the systems exist. Great people are going to fail in a bad system. And finally, pillar 5, it's readiness for growth, the preparation to expand your firm. Ask yourself this: if my caseload went up 25% next month, could my firm handle it? Most of you honestly would say no if you thought about it, but we'd all give it a try because that 25% growth is what we're all looking for. So each one of these pillars interacts with the other, and problems on one compounds with the others. If you fix one in isolation, the others are going to end up capping your returns, and they're going to create fires that you're fighting instead of running your business. When we fix them in the right sequence and the firm changes shape, your life and your income become much more stable. Let me show you what one of these pillars actually looks like. This one is the simplest to explain in one video. Pillar number 3, collections, is one of those things we often put off or never address. Sometimes firms that have been in business for decades still have a huge collection problem. The typical law firm has somewhere between 85 and 95% collection rate. I've seen several with closer to 50% in the recent weeks or months. Clio's 2025 Legal Trends Report puts the industry average at about 93%. That number is probably very realistic. These are the numbers I hear most often when I'm talking to other attorneys about their collections, and it's what we see when we start looking at their books. Usually when we initially ask what their collections rate are, we get a bit of a shrug and this is just what I'm used to, or this is what I have to expect. That doesn't have to be the case. Collections issues also existed inside of Bay Legal, and to an extent, they'll always be an issue. Before we made collections a deliberate project, we were at right around that 90% range, same as everybody else. Bay Legal currently runs above 98% consistently, and there's no accounting trick here. We just put a system in place. It's a systematic process that we implemented over several months of trial and error that runs on a fixed schedule with weekly reporting. For example, we embed payment links in every invoice and every reminder, so all the client has to do is click and pay their bill. If they aren't able to pay their bill, they send a text and one of our staff member calls them and walks them through it. Some people have a little bit of a difficult time entering their credit card information or their bank information. We send out reminder sequences. They fire automatically. It doesn't matter which client, they're going out no matter what. And we have a very specific collection process aimed at that remaining 2% that doesn't include using an outside collections agency. Every time, every client. Now let's pause a little bit and let's do some math on your own firm. What were your revenues last year? Take your billable revenue, multiply it by that gap percentage. If your collections are 90% and we're talking about trying to get you up to 98, there's an 8% gap. For simple math, for a firm doing 1.5 million of billables, collecting 88%, so that's a 10% gap, that gap is $150,000. That's another full-time billable attorney or other billable staff every year that could be on staff making you money instead of costing you money. Funds we're talking about, you've already billed, invoiced, you just haven't collected them. This is the single fastest revenue recovery available to most law firms. It doesn't require a single new lead, it doesn't require any new hires, and it doesn't require more hours from the attorneys. It requires billing and collections system that runs on autopilot, and it's only one of the 5 peers. If you're doing 1.5 million a year and you do have a 10% gap, what are you going to be able to do with that extra $150,000 you collect next year? So here's something very important about the 5 pillars. A couple of them can go out of sequence, but 3 of them must go in a very specific order. Systems before staffing, staffing before growth, every time. Otherwise, you're going to end up in the same place, spending your time fighting fires and looking for solutions. Skip the sequence, and you're going to spend the next year or 2 years in the same bottlenecks in 3 different shapes. Bay Legal didn't go from $100,000 to $2.6 million because we're smarter than anyone else. We did it because we systemized. It went from 100 to 2.6 because we did each of these 5 tiers in order, and we continue to repeat them as we continue to grow. The sequence is the whole game here. If what I just walked you through resonates, if you're sitting there thinking that the collections math on your own firm and that number is bigger than you want it to be, that's exactly what a strategy review is for. 30 to 40 minutes of your time, free, no obligation. A senior experts operator will sit down with you, collect some of your numbers, and score your firm on all 5 pillars. We're not just looking at the symptoms. We're looking for the bottlenecks that are actually capping your growth. And we deliver a written recommendation within 48 hours in most instances. If we're not the right fit for your firm, we'll tell you that, and we'll try to point you to somebody that is. Most firms find at least $50,000 in recoverable revenue in the first 90 days before they spend $1 on anything new. We've seen several firms that find a lot more than that. If this is at all interesting to you, click the link below this video or go to xprts.com and book a strategy review. We'll find a time that works for you and we'll do the rest. Remember, structure before scale. That's the whole game here. Once your systems are in place and your people are in place, then growth comes naturally.